Tesla will be added to the S&P 500. What does that even mean? Welcome to My Tesla Weekend for this special midweek edition, but news has broken and I just gotta pick up the pieces. Standard & Poor's has announced that Tesla will be added to the S&P 500 index in the December quarterly rebalancing. The S&P 500 is an index that tracks the value of the 500 biggest publicly traded companies in the U.S. While many argue this should have been done long ago, nonetheless, this is a very big deal for the company. There are trillions of dollars invested in funds that only buy stock in companies in the S&P 500. Those funds will now be required to buy at least 116 million shares. That represents about 17% of free float, which is the outstanding shares that are even available for purchase. So if we imagine this 20 by 20 grid represents approximately all the Tesla shares, with each one being worth about $1 billion. Some shares are not for sale, specifically those owned by Elon Musk. If he tried to sell them, especially all at once, the share price would likely drop due to supply and demand. The demand didn't change, but the supply drastically did in that case. There are also shares sold short, which used to be a significant percentage, but now it's only about 6% of the outstanding shares. So if you look at the total shares, you'll see Elon's at the one end, which aren't for sale. Then there are always the handful of long-term, large investors who've already decided they won't sell at any price. Not if it doubles, not if it doubles again. No matter what, they're in it for at least the next 10 to 20 years. Below that, you have shareholders who would only sell if the price hit 10,000 a share or 5,000 or 1,000 or some number below that. If the stock rises to those levels and they do sell it, it can stop the stock climbing further. Of course, some people sell because they need their money to buy a house or any other reason. And then there are those who will sell only if it falls too low, and that can cause it to tumble even further. The S&P estimates that these index funds will need to buy about $51 billion worth of Tesla shares within the next month. There are also a lot of more traditional mutual funds that will also buy the stock just because of its inclusion in the S&P, which is estimated at the top end to be another $76 billion. So up to 39%, 127 billion of the Tesla shares that are actually available may soon be bought by long-term holders. So what would 100 to 127 billion in upward pressure on Tesla's free float do? Well, those same forever holders are still there, plus an awful lot more. And then the 10,000 or 5,000 holders, well, they'd still be around, while all the 500 or 800 target guys would have sold to them. It could create a new floor for the stock price at a higher level than ever before. Of course, the stock could remain flat, as it has with a lot of other companies that have been added to the S&P in the past, but there's an awful lot of stock to be bought very quickly and an awful lot of shareholders who have no interest in selling. Still, do not take this as financial advice. I am not a financial planner. I'm just a dude on YouTube. If you don't know what a short squeeze is, I wouldn't bother looking it up because it's very unlikely to happen. It's when the short sellers need to buy the shares to get out of their positions and there aren't enough shares to buy. It almost never happens. If there is a rapid spike in share price, Tesla may decide to do another capital raise, since they could easily put an extra $10 billion in their war chest for as little as 2% of the company, if not less, as there would likely be enough demand for new shares to sell them without cratering the stock price. This has been done before, around the time of S&P inclusion, by other top 10 companies, including Google and Facebook. Okay, guys, what did I get right? What did I get wrong? And what do you think the share price will be on December 31st? Let me know in the comments, and I'm so glad I could hang out with you. It's so lonely here in Quarantine, and you guys make it a downright bearable.